Today, we're diving into the wild ride that SoFi experienced.
It was quite the roller coaster.
And I want to break down what caused all the volatility, the actions taken by short sellers, and everything else you need to know. But first, make sure to hit that thumbs up. Now, let's get right into it.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Starting off, the Personal Consumption Expenditures PCE Index was released early, and as you could see from the futures or pre-market activity, there was a lot of optimism. The PCE came in lower than expected, which the market interpreted as a signal for potential rate cuts. However, this optimism was short-lived, lasting only about 30 to 40 minutes. During this brief period, SoFi was grappling with a significant resistance level at Zurich 699. This resistance has been a recurring theme over the past several trading days. When SoFi hit that mark, I executed a strategy similar to what I did last week. I sold call options at a $7 strike price. This week, I managed to get around $81, which isn't a huge amount, but it's essentially free money. Then, the market took a nosedive. Many people are unsure of the exact cause, but I believe it was linked to algorithmic trading, as there was relatively low volume across the board. This includes SoFi and many other stocks, all experiencing low volumes. In my opinion, it seemed like a coordinated effort to bring down the broader market, which, as you can see, was somewhat short-lived before a recovery ensued. Interestingly, traditional brick-and-mortar banks saw gains today. SoFi, however, closed only 14% up after spending most of the day in the red. Despite being categorized as a bank by Wall Street when convenient, and as a fintech at other times, SoFi's performance today highlights how the market manipulates its classification based on its agenda. There was no significant news or SEC filings from SoFi today, so it was largely at the mercy of broader market movements. Short sellers returned 133 million shares today. They likely saw no need to double down since the market was already working in their favor. Over the past few days, short interest has significantly increased, with 4 million shares shorted yesterday and 25 million the day before. Shorts aim to keep SoFi from closing above $7, with 17.35% of the free float, equating to 182 million shares, being shorted. The average cost to borrow is 0.95%, with a utilization rate of 76%. The better-than-expected PCE data suggested the potential for rate cuts, increasing the likelihood of a rate cut at the September 18, 2024, meeting to 46.6%. However, this optimism didn't translate into concrete expectations for rate cuts. The market remains in a confused state, as seen by the fairly balanced options trading today, 256 million in call options and 185 million in put options. Despite trading close to $7, a significant portion of the volume involved neutral premium collection, with 37% of options traders remaining optimistic, carrying some hope into next week. Open interest showed a strong resistance at the $7 strike price, reaching 40,000 contracts, and 25,000 at the $7.50 strike price. If SoFi had stayed closer to the $7 range, short sellers would have been more active to prevent SoFi from closing above $7. Looking ahead to next week, there are walls of 17,000 contracts at $7, 12,000 at $7.50, and 11,000 at $8, which doesn't bode well. Additionally, consumer-linked data is expected next week, which I will cover in detail over the weekend. An interesting development today was significant after-hours buying by institutional investors. As seen from the timing, large transactions included a notable one at 18.8 million. This influx of big money towards the end of the day helped SoFi and other stocks recover. Dark pool activity was also high, indicating interest from larger institutions, but it's hard to determine if these were buys or sells since dark pools don't show bid or ask prices like the secondary market does. On the technical side, SoFi bounced off a crucial pivot point and strong support level at $6.79, which held up well on both Thursday and today, leading to a nice reversal. This support will be essential going into next week, while $6.99 remains a significant resistance level. Despite the volatility, SoFi remains in the low percentile of the Bollinger Bands, indicating potential for a bullish deviation. With a stochastic oscillator value at 18, it is still considered oversold, suggesting potential for a rebound. Retail investors were also buying the dip today, adding to the optimism for the coming week. However, given the ongoing manipulation, SoFi is likely to face challenges around the $7 mark again. To conclude, today's market action was a prime example of volatility driven by a mix of economic data, algorithmic trading, and market manipulation. While SoFi managed a modest recovery, it remains under pressure from short sellers and fluctuating market perceptions. Keep an eye on key support and resistance levels, as well as upcoming consumer data, which will be crucial for SoFi's performance next week. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.